Bitcoin's price action in 2024 has been pretty spectacular so far. At the same time, broad stock market ETFs have also been running from one all-time high to the next. All of this to say that this has been a very exciting year for investors so far. But where do we go from here? And is there really a chance that Bitcoin will keep outperforming the largest portion of my portfolio, my passive low-cost ETF investments? Let's find out. We'll of course also take a closer look at how each of my investments, ETFs, P2P Lending and crypto performed in February and any important events up to today, March 2nd. And lastly, you'll find out if I've been sticking to my 80-10-10 investment strategy given the state of the markets right now. Let's begin with stocks in the form of low-cost ETFs, which are and will remain by far the largest position of the investment portfolio I share with my wife. These are the bedrock of our early retirement strategy and the investment we have the highest conviction in long term. Well, the stock market rally continued in February with our main ETF, the Vanguard FTSE World, finishing the month up 4.3% for a 2024 performance of 6.98% so far. Looking at actual numbers, we're up over 11,600 euros last month alone and 21,100 euros since the start of the year. The American S&P 500 index has done something we haven't seen since 1971. It was up 16 out of the last 18 weeks. This means we might be due for a correction in the markets. But since we don't know if and when it's going to come and trying to time the market is a bad idea, my wife and I are just going to keep cost averaging into the accumulating Vanguard FTSE World just as we do every month. I still think we're going higher until the end of the year, but it's definitely not going to be a straight line upwards like we've seen over the past few months. One of the brokers we use the most is Trade Republic, which is also serving us as a high yield savings account, paying us 4% interest per year, secured by a 100,000 euro bank deposit guarantee. And in February, we earned 61 euros and 8 cents in interest on our savings there. By the way, I linked the best low-cost brokers for ETFs in Europe down below in the description, which is a great way to support me if you'd like to. And while you're there, don't forget to subscribe if you haven't yet. Okay, we're going to mix things up a bit today, so let's talk about crypto next. That's because we've seen some incredible price action lately in my investments in the two largest digital assets, Bitcoin and Ethereum, which I'd argue is a lot more interesting to look at compared to what has been happening in the peer-to-peer lending space last month. We'll still get to that as well later on, don't worry. Let's begin by taking a look at how this did in February. Bitcoin finished the month up 44% for an incredible year-to-date performance of 49% so far. And Ethereum performed even better at plus 46% in February and 52% so far in 2024. We're definitely in a crypto bull market right now, which seems to be largely driven by institutions for change. I personally have had 0 friends or family members contact me about Bitcoin so far this year, something that happened a lot during the last 2 rallies from 2017 to 2018 and 2020 to 2021. And looking at Google Trends, we can see that interest is slowly picking up, but nowhere near its previous high so far. Not only that, the Bitcoin halving hasn't even happened yet, it's coming in April, which historically has driven prices a lot higher in the year that followed. By the way, I definitely don't want crypto to become the focus of this channel. These are still highly speculative investments with very high risk, so you should limit them to a small percentage of your investments in case you decide to add them at all. But I also want to be open about the fact that our small allocation to crypto has significantly boosted our investment returns since 2017, with us currently being up an average of over 440% on Bitcoin and over 250% on Ethereum. Sorry for not sharing the actual amounts of each here as I do with my other investments. The thing is, when it comes to crypto, sharing the exact amount you own is a bit of a security risk. So I wouldn't recommend sending anyone a screenshot of your holdings, for example. Either way, we've been able to take out our initial investment several times over since 2017, something I'm very grateful for. These are still very risky though, they can drop just as quickly as they've gone up. So rebalancing on a regular basis to keep their percentage of your overall portfolio to a reasonable level is likely a good idea. So even though these have been my best performing assets, I would never make them the main position in my portfolio. Instead, they will remain a bet on the future and also sized accordingly because of that, much smaller than our core investment. Broad-based, low-cost ETFs like the Vanguard FTSE World are going to remain the core, or about 80% of our portfolio, since stocks are the asset class we have the highest conviction in long term. That's never going to change. That's also how we invest on a monthly basis. 80% is going into our ETF and the remaining 20% are usually split between crypto and peer-to-peer lending. Since I do see a lot more upside in Bitcoin and Ethereum compared to peer-to-peer lending, at least in 2024, my original 80-10-10 investment strategy has been more of an 80% ETF and 20% crypto investment strategy over the past 2 months. That's in part because interest rates and loan availability has dropped a bit on several peer-to-peer lending platforms, and I just don't have time to deal with that right now, but more on that later. Sadly, trying to time the perfect moment to buy Bitcoin is harder than you may think. Here in purple, you can see the total return during the best 10 days each year back to 2013, and the total return for the remaining 355 days. As a result, buying and holding as well as cost averaging on a regular basis has been a solid strategy for Bitcoin investors so far. But you should still be able to stomach regular corrections of 20 to 30% even during a bull market, otherwise this asset class is not for you. As for buying and holding Bitcoin and Ethereum safely, I'm using the Netherlands-based low-cost exchange VWCE, which has become the global #1 when it comes to buying and selling crypto in euros, even outpacing Kraken in volume. They have a ton of security features, including two-factor authentication, which you should definitely activate as soon as you open an account, a total of $755 million of insurance with their crypto custody providers like Coinbase Custody, as well as a €100,000 account guarantee if someone were to somehow gain unauthorized access to your account and withdraw your funds as long as you activated security measures like 2FA. I also just purchased an additional €750 worth of Bitcoin and €750 of Ethereum using VWCE on February 24th. Now, you should still move most of your crypto to a hardware wallet to keep it 100% safe, especially if it's worth more than a few thousand euros. The one I'm using the most right now is the new Trezor Safe 3, but a ledger is a great option as well. Just make sure you only buy these new from the official source, never buy them used, and that you keep an offline backup of your seed phrase so that you can regain access to your funds if your hardware wallet were to ever break. Alright, now let's finally move on to my investments in peer-to-peer lending. These make up around 10% of our portfolio. February was an excellent month income-wise. I earned a total of €380.78 in interest on the 7 platforms I'm currently actively investing on. And here's how my money is currently distributed among them in percentage terms. Okay, now let's take a look at what happened on each of them one by one. At over 65 euros in earnings, February was a good month on Mintos. Sadly, the decrease in interest rates for its best-rated lending companies is starting to become more and more noticeable. Meanwhile, at 59 euros, income had a great month as far as earnings are concerned, but the constant cash drag was quite annoying. As a result, I withdrew 500 euros in the middle of the month, which I moved to Escatit and Via Invest. Shortly after I did that, income finally added a new lending company, Current Auto, offering car rentals. Sadly, the interest rate of only 10% and the fact that the lending company isn't profitable yet makes it less interesting compared to other loans on the platform, at least for me. Still, I'm happy to see that income is finally adding new lending companies and increasing loan supply for investors. Next is Escatit, which had an excellent month with 70 euros in interest payments. As I mentioned, I deposited an additional 250 euros in mid-February. With over 61 euros in earnings, I had my best month on Via Invest so far, and I added the remaining 250 euros I withdrew from income to this account on February 19th. I had no cash drag on RoboCash either, with everything running smoothly as usual. And on Lande, where I invest into secured agricultural loans, I had an excellent month with over 55 euros in interest payments, as 3 of my loans were fully paid back. Last but not least, Debitum also performed well, with all of my loan payments being on time so far. The regulated platform changed its branding from Debitum Network to Debitum Investments in the end of February, as it's planning to offer more than just investments into loans, likely similar to what Mintos has gone through. Alright, that's it for my investments. This year so far has been way more exciting than I could have anticipated, and I'm personally feeling very bullish about the remaining 10 months as well. Having said that, you should be ready to deal with plenty of swings also to the downside. There's no way we'll simply continue to go up like this without interruptions, some of which could be quite painful to look at. If you just keep cost averaging into the market no matter what's going on, which is exactly what we've been doing for over 7 years, and you have a long time horizon as an investor, then whatever prices do in the short run is not going to matter much anyway. But now I'm curious to hear from you guys. Do you think a small allocation to Bitcoin in addition to ETFs makes sense based on its 15-year history so far? Or do you think its outperformance is going to stop at some point? Let me know in the comments below. And please be wary of scammers and impersonators, which somehow always show up whenever I talk about subjects like this. I have nothing whatsoever to sell you, and I use no social media outside of YouTube. Before you take off, don't forget to gently tap the like button if you enjoyed the video and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to anything I mentioned in the video. And please don't forget that none of what I mentioned today was meant as investment advice. I'm just openly sharing my personal opinion based on my experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.